So welcome, and today we would like to talk about the future of supply chain finance. I know that Markus, you are one of the specialists, or one of the best specialists I know on supply chain finance, and so maybe all AI and new technologies could revolutionize the SCF management. Maybe talk also more largely for you and with you, Jean-Phillipe, about the trade finance in general and what you can expect at a company like John Deere. So maybe let's first start with, okay, Jean-Phillipe, you introduced yourself already, but Markus, just to introduce you and Orbian.
Okay, so hello everybody.
Yeah, it works.
That works. My name is Markus Schiffers. I'm a managing director at Orbian, working with the company for 8 years. Before that, I had a career in Treasury as well, so I spent 15 years of my life and career with Siemens Financial Services. And as such, I had the privilege to set up the supply chain finance initiatives at Siemens, starting from 2007. So I'm in the industry for quite a while. I still like it, and I'm here to answer questions. I did not bring any presentation. I want to make sure that we save some time here. And my daughter called me earlier. She needs to talk to me urgently on something super important. She's 8 years old. Things cannot wait.
Yeah. Okay. No, but I'm sure that you can, let's say, give us an overview of supply chain finance. So maybe first to set the scene, Jean-Phillipe, so what are the, let's say, most pressing trends you see in trade finance in general, working capital optimization, supply chain finance? So could you share with us what is your, let's say, perception? What are the trends or the key element you see?
I think we never stop speaking about it in the beginning of the day. So I would say data leveraging, if I may call it like this, is the first key. Yeah. We speak about working capital, we speak about how do we forecast, we speak about whatever we want in Treasury. But I think we made the message extremely clear. If you don't manage your data, you manage nothing. And I think it's one of the part where when you look at supply chain finance, and I usually like to bring the next topic, which is nurturing your relationships with your suppliers and your customers. The true questions is how do you identify the relationship you have with each of them and the challenge they face within their own scope. And when you are able to identify this, then you're able to do an actually great policy about supply chain finance. And it's all about data.
Yeah, so maybe Markus, again, for those who are not familiar to supply chain finance, could you just remind the principle and what you've developed in your former, let's say, life as a corporate, and why it's so important, and especially these days, because we are talking about, let's say, funding and funding issues, but optimizing your working capital and being more efficient is also a way to get a better financing or to accelerate the, let's say, conversion cycle Arif was mentioning earlier on. So could you just give us a short definition of how it works?
Okay, so when you talk about or think about supply chain finance, in simple words, it means that a supplier is receiving an early payment from a third party. So a supplier has a payment term, he's shipping something, there's an invoice, it could say 60 days, but the supplier should not wait 60 days for the funding. Supply chain finance comes into the play, which means the supplier gets the option to be paid earlier by a third party, which could be Orbian, for example, if we are the provider. Now, why is this relevant for the buyer, who is the client in it? So it's all buyer-driven. Why would a buyer set up a supply chain finance program? Why would he care about these things? For a buyer, there is an incentive to do supply chain finance because he knows that if a supplier gets an early payment option, that he can negotiate better terms with his supplier. And this, I think, it's not about screwing the supplier. This was like 15 years ago in supply chain finance. It was about screwing the suppliers. This is about finding the optimum between you and the suppliers. What is a reasonable payment term given the financing structure, given the supplier rating, buyer rating, and other factors? Supply chain finance is used by buyers to improve their operating cash flow. It's to get a better working capital, to reduce the net debt. And this is what supply chain finance is great at. And if you do it correctly, you can have thousands of suppliers attending on a supply chain finance program.
You agree, Jean-Phillipe, it's a way to to preserve your suppliers? Because I'm thinking about the German car industry where it was quite an issue. So you have so many suppliers, so you outsource, but at the end of the day, you are highly and heavily dependent on small suppliers that could be a stretch. And so your interest is to preserve the resilience of your suppliers.
Yeah, I think I can share a quick, fast story that we had at John Deere. We had one of our supplier in India, where we represent globally 28% of their turnover, and they were in financial struggle for year end, and the amount that we owe them on the next 90 days is not even 1 day of interest for us. So then when they came to us and asking to make sure that all the invoices paid and in time, and we can feel the stress. So this was, let's say, supply chain finance, but the old-fashioned way. Yeah. So you understand that there is a stress behind. So one of the thing we did as Treasury is we actually called the CEO, and we were like, well, it seemed that there is some stress, either anything we need to care about, or any issues, and they actually revealed the fact that they were short, let's say, for the year end. So we actually take the decision to pay everything in advance. That may sound weird, but actually we gain 20% afterwards for all the coming years. So it's from far paid, and we have a gigantic gain in the relationship. And what I want to emphasize with this little story is, especially when you're a big company, sometimes you may see how impactful a little step can be, but supply chain finance is a way to make sure that you guarantee the greatest relationship with your suppliers, at least the suppliers that you care about. Let's be transparent. In a way that they are thriving through you, and you are thriving through them. And I think that's what you need to care about. Is, for me, nurturing relationship is as important as optimizing flows in Treasury.
But when you discuss, Markus, with customers, so I guess you prepare a sort of global program or a large program. So the idea is not to do and cherry pick a few suppliers. It's to try to serve them properly. Maybe you select some of them. So how does it work? And what is the role of Orbian in this process? Because some people could think, okay, why not going one-to-one and bilaterally discussing? So is it a platform? How does it work? So
yeah, I guess the trick is to really try to harmonize the approach in supply chain financing. So what we do is we typically set up a global program which allows all subsidiaries of the buyer to use this program. What we then do is we choose the right supply chain finance means, because there are different products that you can do. You can do reverse factoring. This is very old school. You can do something that we call express supply chain finance, where we can pay a supplier without the supplier selling and assigning receivables to us, which is much easier for the supplier to join and helps us to go really long tail. Yeah. So if we want to help smaller companies, it's almost imperative that you have a very lean process to get those suppliers onboarded. So our vision is to really sign on all strategic suppliers, be it big or small, and cover the globe for a buyer. And for that, we structured what we call a bank agnostic model. So in our world, we will always be the transacting partner to the supplier. There's never any direct relationship between a funding provider, which could be a bank, a non-bank, an insurance company, what have you, but they provide the funding to us, and we then pay the supplier. Because in my experience from Siemens back in the days, it was incredibly important to us that the supplier did not have to go through the process of a bank onboarding, which was nerve-wracking 25 years ago, but it hasn't improved. So if we think about a KYC process, if your supplier needs to run a KYC process with a bank to be able to sell 100,000 worth of receivable because it's a relatively small supplier, it doesn't make too much sense anymore. So what we are really good at, and what our USP is structure the programs in a way that it works for your supplier base, and that you can bring on the banks to fund this program that you like, not the banks that are good at supply chain finance. There are a few banks in the world that are good at supply chain finance, but when it comes to our solution, we can have every bank as a funding provider, and not only the ones that have certain transaction capabilities.
So you give us pieces of advice. So you help your customers to set up a program, to onboard many banks. I know it could take some time to onboard some banks, but so you try to define a global strategy for the customers. So and again with an approach of serving all the suppliers, or maybe at least a big portion of the supplier. And so could it be activated when you need it, depending on your cycle, or does it work? Because you have also a business at John Deere with seasonality and cyclical. So how do you, let's say, activate or not the program? Is it something that you do depending on your situation, or something that you continue to feed just to make sure that it's still up and running?
I think supply chain finance is not good for this flexible approach.
Yeah, and it should be applied.
It needs to be applied. It takes a while. It should be very predictable to the supplier. Yeah. The supplier should know that if I do business with my client that I like, I get an early payment. This should not be about the buyer wants to do something this quarter and then all of a sudden he starts to push out payment terms and I'm kind of concerned that I'm not getting my cash. There are different solutions that we can offer that are much more flexible. Supply chain finance, I think, is something that gives you a steady working capital improvement. It takes a while, like 12 to 18 months before you see the impact. So don't start if you want to improve your next quarter end. Supply chain finance is not the right solution. You need to go for something different.
Yeah. You agree with?
Yeah, and I would say it's also we get scolded by JP Morgan for years. I would not say decades, but almost, because John Deere in the US has the most convenient payment terms ever. Like in the US, we pay something like 5 or 7 days, not 90, like 5 or 7 days. They see nowhere that we pay so fast. And indeed, so John Deere was in downturn last year. So one of the questions is, how do you optimize your working capital, where you need to you can work on your payment terms? Yeah, okay, but if you want to do it, how can you do it in a way that it will not necessarily impact negatively your suppliers, where you have great relationship with? Well, actually, in that case, what we did is we picked a certain set of suppliers, which were strategic and trustworthy suppliers on long-term perspective, and we actually went through a supply chain finance program with them. So then we extended all payment terms on the short ends, but they still get paid exactly how they were expected, and they know that with us we may have flexibility, but we never want to put them at risk. And I think it can be used strategically, and that's the way I like to see it. Is you may, as treasurers, or as corporation in general, you may not want to have all your suppliers in the bucket, but you want to be able to say, well, if you came to the area of good suppliers and we have a great relationship, trust between each others, then this is a program we would like you to be in. And I think it's part of the negotiation. Everything is part of the negotiation. And indeed, the fact that the tool is improving nowadays, it's a game changer for us.
You confirm, Markus, that it should be a selective approach, because then you need great facilities behind. So it's a long process. So you should be more, let's say, focusing on the key suppliers rather than to try to serve the all range of suppliers.
You know, what I said is, focus on the strategic suppliers, but they can be small and big. So I think when we, and from a corporate perspective, if you have the time and you're not in panic mode and you can set it up properly, I think from a corporate perspective, it's a great thing that you support smaller companies as well. And don't focus only on the smaller good suppliers, because you have great relationships, right?
Fully agree.
And you want to keep it that way. So if you're good to your supplier, they're good to you. So if you can offer them something that makes sense, it should be done if it's not too much effort from the buyer side. And I think what our approach is when it comes to supply chain finance, follow the buyer. So allow him to, if it's minority-owned businesses, if there's a program for minority-owned businesses, let's onboard minority-owned businesses. They may only have 40,000 revenue a year with his buyer, but this is a program. So, this is a program. It's more ESG than many other things we see in the market, I think. So we can use these programs to support those means, but you have to have the right structure in place, because what has been used for the last 20 years is not good enough for that, because it's too difficult to apply, too much administration, too much paperwork, too much legal review.
And what is the weight of technology in your solution? And are you developing a lot of, let's say, AI or whatever technology behind, just to better serve your customer? Because as you say, it's the problem is the paperwork behind. So you try to simplify the life of your customers. But is it important you describe Orbian also a tech company?
I mean, I don't know whether we are a tech company. We have been founded by SAP and Citibank 26 years ago, so we had been a tech company 26 years ago. I would maybe describe us as a very smart financial service provider. So we have our own platform, and we find partners that we want to work with that help making our product stronger. And if we think about AI and making the buyer's life easier, the way we use it is that we partner with a data analytics company that is using AI to analyze and benchmark supplier payment terms. So, and I think it comes a little bit into the direction that you mentioned earlier, Jean-Phillipe, like understand your supplier situation. What we do is we analyze the payment term that your supplier has in the market. So not with your client, he knows it itself, but what is the benchmark? What is the benchmark? And once you understand that better, you know what is the best approach to such supplier, because payment term extension sometimes may not be the best approach. Sometimes it may be something different that you need to apply. And what we have done recently on the technology side is we developed a solution where the supplier is not paid early, where the supplier is paid on the due date, but where we can provide a payment term extension ourselves to the buyer. And what that means is that the supplier is not impacted by that. It means that there is no negotiation. It means that procurement is not even involved, and it has a great result, which means whether it's used or not, it doesn't make a difference to the supplier. So this becomes relevant when it's about flexibility of the buyer. If you want to be flexible, it would be nice to be flexible without impacting your entire supply chain. So if you want to manage your working capital, you should use what we call payment with terms. And we use AI to analyze whether your supplier should be on supply chain finance, so where you negotiate longer payment terms and we predict the one that you will be successfully negotiating, or whether this supplier should not be on supply chain finance because you will most likely not be successful in negotiation, and hence this supplier is on what we call payment with terms, where we give you the payment term. And I guess there are evolutions in this step. And if we think about the smaller suppliers, the long-tail suppliers that I'm mentioning, I guess next steps are like, we will take care of the term negotiation for yourself for non-strategic suppliers. So if these are non-strategic suppliers, we can take over those term negotiations. We will analyze it using AI, and we get you the better terms. And then obviously for you have the working capital benefit and the supplier as well.
And maybe a final question for both. So how do you see digitalization supporting the working capital optimization? Because it's a clear trends we saw in the different surveys, EACT, let's say PwC, some others, that optimization of working capital, cash flow forecasting, accuracy, etc., are top priorities. So why do you see the digitalization supporting these processes, or the enhancement of this process?
I would say, in general, the better the data, or what Benjamin was saying, trash in, trash out, I'm more optimistic. So the better the data, the better the decision. I would say, to my perspective, it's not about digitalization. It's about how do you get the data, how do you get to use the data, and how do you get smart decision from it. Stronger, faster, smarter. To make it very simple, it's all about this. And the supply chain finance is one component of a big structure, complex structure, which require optimization at every aspect. I mean, the structure, not supply chain finance. And supply chain finance can bring a lot of value added. And I think we are in the era where we have enough understanding to all this data to be able to take the right decisions and move forward with all these solutions.
Confirm it's any technology you see that could be helpful for optimization of the working capital? Or?
You know, I think when I look at our company, to be digital and receive the data in a digital form is a must. So in our reality, there's no paper. So we don't touch invoices that exist in paper. If our clients receive them still in paper, they will do something with it. They will digitally.
Usually they are able to provide you with the proper.
Of course,
okay.
Of course. I mean, the good news is for SAP, for example, they have a payment method embedded that is called Orbian, because we were founded by them. It's still in every system. So our clients just call it, send us a file, and we know what to do with it. So without digitalization, I think you should not even dream of supply chain finance. So your data has to be digital. But with AI in the game, I think we will be much better and much faster in predicting the outcome in supplier negotiations, which will help the acceptance in the procurement department, because many procurement departments in the world got frustrated by supply chain finance programs where they were asked to negotiate terms that were not negotiable, and where somebody could have told them already at the beginning that you can save those hours and days because this supplier will not move the payment terms. And this is why some other solutions are so important, and they have been developed over the last years. And we see those growing much, much faster than supply chain finance, because there are many supply chain finance programs out there. Some are successful, others are a little bit less successful. But if you can combine it with a solution that is much more flexible, faster, that still improves your operating cash flow, it's not about the perfect calculating or prediction of your cash flow 9 months in the future. It's about being able to change your cash flow still. So if you are able to change your cash flow within a month, it's much, much easier to come closer to your forecast.
Of course.
And if I can add to that, when we speak about the procurement, I had a very nice story with them. So with John Deere, we were working with dogmas, and dogmas is basically an opinion set as a rules by authority. And then we were missing a gigantic amount of good deals with suppliers, because our procurement team were applying a dogma they had on how they should negotiate each contract. And sorry, not each contract, how each contract should fit with their negotiation. And at some point we had this nice meeting where we were telling them, like, well, for strategic suppliers, big or small, you need to adapt and see what fit the best or both needs. Because that's how we build. If you plan to have a supplier long term, you need to build from scratch a negotiation long term. It was a tough one, but I can totally relate that a tool like this is very helpful.
Okay, thanks a lot. So it's time to close this session, but really thank you for sharing your expertise and views. And if you have any specific question, you have an expert here, so do not hesitate to ask Markus or the team around at the booth. So you will have, let's say, direct answers, especially when it comes to accounting issues and this kind of questions. So thanks a lot. And if you have any question, do not hesitate to address to these two gentlemen. Thank you very much.
Thank you all.